Good morning, everyone. This is Brian Weber with the Euro-Dollar Technical Analysis video for the 27th of March 2012. Now, the video was a little late this morning, and the reason for that, and there is a very good reason, is we were actually looking to see what happened at the current support level before we made the video, just to get a little bit of confirmation on what we expect to happen today. And what we expect to happen, this is a 1 hour chart that we've got here. Now, over the last few days, we've had price extensions as well as a head and shoulders formation. But since the trend retested this 200 period moving average on the 1 hour chart right down here on the 22nd of March, basically this started the new trend because we had to bust out of very resistance points as well as a downtrend line. So right here on the chart where we tested a cluster of candles here on the 200 period moving average. Now the 100 is already above the 200s. It crossed here, so the trend indication was looking relatively strong. So price came down on a correction. It bounced up, put in a new high, and put in a resistance point around this region, which is the 132.85 point, and came down and retested that 100 and 200 period moving average down here. Now, what this was telling us that there was buyers in the market here, but we just could not break above that 132.85 zone up here. This zone was rather strong, and yesterday in the market, the only reason why we broke above this zone here was based on Bernanke's comments. Okay, so this was pretty much news flow, really. It wasn't like a news event like the GDP or anything like that. It was purely Bernanke comments, but it's still regarded as news. So that's really the only reason why we busted out of this resistance point, the 132.85. Technicals were not pointing to a move up here. Okay, we did have the trend continuation off the 200 period moving average, but there was no indication that this resistance point was going to break unless an economic event or comments, as I say, from Bernanke came out of the market. So now that we have broke above that resistance point, we're looking for technical traders to re-enter the market and give us direction. All right, so basically what we're looking for is a retest of that resistance point, but to hold its support. Now, if we take a Fibonacci retracement of this current swing, the swing low to the swing high, the actual move that broke the resistance point here. Okay, so the low to the high here. Okay, and if you draw on that resistance point as well, just to mark it off in the chart. Okay, so roughly about here, resistance. Okay, multiple touches. The 50% retracement level at 132.80 is tying in with that resistance point. Okay, so here's the technical resistance, and the Fibonacci resistance is 50% retracement, which is confluenced with that resistance point. Okay, so 132.80 to 132.85 is what we're looking for the euro dollar to move to, retrace to, and offer buy signals. Okay, so for a technical trader or a technical point of view, that's what we're looking for. Because this was a news candle right here, or a comment based candle that broke, this does not get technical traders into the market. Okay, this is news traders or news flow traders who trade this kind of move on the breakout here based on comments. But there's no signal or there's no retrace for technical traders, technical analysts to get in the market here. And the way for a technical analyst to get in the market here and prove that the trend is probably strong is to wait for a substantial retrace, and that is the 50% retracement level, which is in confluence with that 132.80-85 level. Okay, so if we get a pullback here, we're going to be looking to try and get long in the market as long as we get the signal to go long. Okay, there's no guarantee that level can hold, so we'll always wait for the confirmation, and I'll discuss the confirmation in just a few seconds. But for technical traders to come back into the market and actually trade this breakout move, we need this pullback to the 50% retracement level. So we're pretty much getting a 50% discount on a trend continuation, if you like. Okay, and the targets will be that prior high there, which is around the 133.68 level. Okay, that will be your first target, and above that, your second target will be 34.10, 34.20. Now, for the actual confirmation, if you just skip down here a 15-minute chart, the 15-minute chart, again, you can see multiple support and resistance points here. What we'll be looking for on the 15-minute chart is candle formations backed up with divergence. Okay, so really what we're looking for, this is the region that we're looking for price to reach before we can look for buy signals. Okay, so we're looking for a market to come down and do something like this, take a little bounce here, and that come down and retest this level. Now at this point, when we get the first test and price bounces and comes back for a second or even a third attempt at this support point, what we're going to be looking for is a stochastic to actually give a divergence signal as well. Alright, so higher lows on the stochastic when price is putting in equal lows or just slightly lower lows. And the added confirmation will be pin bars, rejection candles with large spikes to the downside. Just something showing us that there is rejections on the actual chart. Now, I think you guys will probably know what a pin bar is. It's similar, something like this. This is a little large, but we're looking for a spike in a support with a small body candle to the upside, okay? Or just really large rejection spikes, sort of like this with the body of the candle. Once again up to the upside, but we're looking for rejection spikes in a support, basically candles stabbing the support point along with stochastic divergence. And some examples of the kind of candle formations that we're actually looking for is just right here. Okay, so again, you can see rejection spikes down here on this pin bar. Okay, and again, you can see a rejection spike here on this bar here that's stabbing the 100 period moving average. Okay, so that's what you're looking for, that support. And if you do get that down here at the 132.85, along with stochastic divergence, then again we'll be looking for those prior highs around the 133.68 to be tested and possibly broke, which will take us up towards the 133.87 level, and then possibly the 134.20 level up here. Okay, any moves to the downside will have to breach that 132.80. If you don't breach the 132.80 level, then we're safe to go long as long as we get the signal. But any moves below that 132.80, look for it to hold as resistance and then get short in the market. Okay, so again, just to cover that, this is the crucial level today. Okay, this is going to be our buy level or our sell level. Okay, so if we come down and we give divergence on the stochastic and we get rejection spikes, then we're going to look to get long in the market. Okay, and if we come down and break that support point and come back and retest it as resistance, then we're going to look to get short in the market. Okay, so it's all about that 132.80 to 132.85 zone today. Okay, guys, have a good one.